Welcome to CEO Connect, brought to you by CU Solutions Group. On this month's episode, President and CEO Dave Adams looks at a post-COVID-19 world through future trends, credit unions, and consumer finance.
As we all become experts at Zoom meetings and conference call protocol, when not talking into our computers or feeling stir crazy, I'm sure that we're asking ourselves if the world will ever be the same after the COVID-19 crisis. Well, the short answer is that it won't be the same. We all know that. Social distancing is a term that will become permanent in our lexicon, at least until the next big crisis overshadows this one. And futurists are surely seeing great opportunity right now. We all want to know how the world will change, and they will be ready to shape our thinking as we strategize for the future. We should be ready to read and ponder and rethink the way we approach credit union business and organizations who serve credit unions once these future trends driven by this pandemic become clearer to us. So I share my thoughts first about some broad future trends and then more specifically about credit unions and consumer finance. Here are my top 5 societal trends coming from the COVID-19 pandemic. Number 1, the world will differ greatly pre-vaccine and post-vaccine. As we phase in our public and private sector back-to-work plans, all businesses and other organizations will need to have a pre-vaccine and post-vaccine mindset. This applies to every organization that gathers people, whether sports arenas, churches, businesses, restaurants, retail outlets, and so on. Everyone will be affected. Until there is a successful and broadly adopted COVID-19 vaccine, continued consideration will be given to face masks, gloves, social spacing, frequent hand sanitizing, and virus testing. For instance, Amazon has announced that it is creating its own COVID-19 test for all 840,000 employees, as one dramatic example of how they are looking at the pre-vaccine period. Now, for sports arenas and concert halls to open, there will need to be seat spacing and likely continued face and hand protection protocols. One can imagine continued restrictions on meeting sizes for several months, and even after restrictions are lifted, private businesses and other organizations will continue to implement these precautions. For credit unions, the pre-vaccine plan will likely include all of this in order to protect employees and members. Branches may reopen, but with member spacing, encourage face masks, plenty of hand sanitizer, and other measures. In some cases, pre-vaccine credit unions may stick with the appointment-only approach for branches, especially as members will have become accustomed to remote service delivery for all of their essential financial services needs. And even in a post-vaccine world, credit unions will likely significantly rethink their brick-and-mortar strategies for both retail operations and administrative centers, where they feel pressures to accommodate remote work for employees and service expectations for members. The second trend that I see is this: we must adopt a never-again mindset. The public outrage regarding the abrupt and almost total economic shutdown should lead both the government and private sectors to say, we will never let this economic pain happen again. At least that is the logical conclusion. Sadly, logic often doesn't drive public or private sector planning and decisioning, but it should. Now, relative to a health crisis specifically, federal, state, and local governments should be better prepared with essential medical gear and healthcare support, as well as widespread testing capabilities. This should lessen the impact of future waves of COVID-19 or other variants of the virus. And ideally, rainy day funds should be created. Unfortunately, most of us are skeptical about the government's ability to do this because of tax policy implications. And consumers, we're just not very good at it either. But government preparedness will never save us from ourselves. Consumers and businesses need to be better prepared for the next crisis, whether it's health-related, terrorist-driven, or related to a natural disaster. Overborrowing and a lack of savings have always made each economic crisis far worse. The fact is, we all need to save more, borrow more wisely, and improve our disaster preparedness. This is true for consumers and small businesses, and credit unions can play an important role. For credit unions, there would be great opportunities on two fronts here. First is to work as an industry to make sure that we have better programs in place to provide financial backstops for all types of lending. Not just small business loans or mortgage guarantees for mortgage loans. Our industry has long needed a consumer loan guarantee fund, especially for emergency cash loans when they are needed in a moment of crisis. With proper planning as an industry, we can be better prepared by creating these programs. And some funding might be obtained as a preventative means from the federal government and/or private foundations. Also, credit unions, like all businesses, will need better disaster preparedness plans that are updated and tested on a regular basis. The second great opportunity related to this trend for credit unions is to promote more financial well-being programs to their members. This should include both relevant financial education content as well as incentivized savings plans like CU Solution Group's Save to Win PrizeLink Savings Program. Consumers need to be urged to prepare more effectively to have at least 6 months of living expenses in a savings account. These are not new concepts, but they are more relevant than ever coming out of this severe economic crisis. Credit unions can also expand their financial counseling services to include smart debt management. This is especially true for more financially challenged members. And related to both opportunities, credit unions need to mobilize to have emergency short-term loans, also known as payday alternative loans, expanded and available for members on a broader basis. Helping members with food storage and disaster planning could also be an opportunity that helps insulate members from panic and financial stress during a severe economic shutdown. A third trend, remote work is here to stay. Much like all businesses, CU Solutions Group has learned a lot about how we can function and prosper even as a business, even with remote workers. The technology tools have been in place for a long time. Cloud-based file sharing, video conference call capabilities, collaborative file sharing, and remote sales demonstrations are all being universally used now out of necessity. As such, like many businesses, we are rethinking our need for physical facilities. Remote work is here to stay, but applied much more broadly than we ever anticipated. We plan to significantly downsize our physical office space and expand our remote work opportunities for staff. This will put tremendous pressure on the commercial real estate market as more and more businesses do this, and for those who finance commercial real estate. It will also create huge opportunities for businesses like Microsoft, Zoom, and others who enable these technologies to help with effective remote work processes. So for credit unions, there are two broad implications, one for employees and one for members. For employees, this just means that the workforce will increasingly demand and expect the option of remote work. And in the competition for talent, credit unions will need to accommodate this. It creates a win-win, obviously, for employees and for the credit union with the cost savings generated. Of course, the legacy costs associated with brick and mortar will create a challenging dynamic. Now, this is nothing new. It has just been accelerated. And for administrative center decisions, credit unions may want to pare back their space planning in order to accommodate this new reality. On the member side, the good news is that members will not only be more receptive to remote service delivery, they will actually demand it and expect it. What used to be a competitive concern for serving millennials will now become the new normal for virtually all consumers. They will demand seamless, omni-channel service delivery through mobile, call centers, ATM and ITM technology, and remote financial counseling. Even technology that enables remote management of drive-through lanes will become the new normal. Consider the way that Intuit has added video-based TurboTax Live functionality for the do-it-yourself tax filers who they serve. When they want to speak to a CPA for a more complex issue with their taxes, they can do that via the TurboTax Live video link. These advisors can take control of the consumer's online forms and answer questions remotely without ever having to step into a CPA office. The human interaction is seamless with their software, and it's extremely effective. Credit unions will need to offer similar support for financial services through their remote service delivery channels. Trend number 4, businesses who can deliver will deliver. A fourth major trend is the forced realization of the convenience of online shopping and product delivery. Businesses who figure out how to be relevant in a home delivery world, they will truly deliver, excuse the pun. COVID-19 forced restaurants to rush to provide takeout and delivery menus, where in many cases they were unaccustomed to doing so. Companies like Grubhub will be more popular than ever. But the increased relevance and acceptance of grocery delivery, wine delivery, and the continued trend of online retail buying and delivery are all here to stay. So consider buying stock in companies like Amazon, UPS, FedEx, Grubhub, and others in this new economy. This has likewise accelerated the attractiveness of remote car buying and remote research and purchase of other big ticket items. Consumers now expect everything to be conveniently researched and purchased online and delivered to their doorstep. The implications for credit unions will include the need to understand how their credit and debit cards can stay relevant and top of wallet in this environment. Again, this isn't a new trend. Awareness and acceptance of online buying has just been greatly expanded by all demographics. Credit unions might revisit how their mobile banking apps can help facilitate these consumer buying needs. For the bread and butter loan business of credit unions in financing mortgage loans and vehicle loans and boat loans, credit unions will need to adapt here as well. Car buying services like Carvana will displace or diminish more traditional indirect lending programs, and credit unions should expand partnerships to assist members with these providers. For home buying and financing, the key emphasis will be on speed and remote processing of loans. Credit unions have been forced to become expert at this, with improved processes for appraisals, home inspections, and document processing. Consumers will expect and demand speed and remote service delivery more than ever. Trend number 5, human touch will be craved, but generationally it may diminish. What does that mean? With all the unknowns associated with life after COVID-19, one has to wonder about the basic human need for social and networking contact and interaction. In the short term, this will be craved as we come out of the long home quarantine period. This should make concerts, festivals, and conventions even more attractive as long as proper social distancing measures are followed. But as the next generation is increasingly fed by remote college courses, online gaming, the proliferance of on-demand entertainment options, and all of the home delivery options that I mentioned earlier, we have to wonder how dramatically society will change in the future. We will likely always have different personality types who require more or less human touch. The differences between extroverts and introverts will always exist, obviously. But one has to wonder about the effects of a society that becomes increasingly automated and detached from human interaction. The COVID-19 pandemic seems to drive this even further. So for credit unions, one of their great differentiators has always been human touch. As humans, we will always desire this and expect it, but it will likely come in different forms as a result of these trends. Members' relationship with the credit union and their human touch experience will likely come more and more through Zoom-like video interactions and phone calls where member service excels, as well as mobile service delivery. Staff service training for phone and video service will become more important than ever. And whether service is provided by a mobile chatbot, via phone support, or from a video link like Intuit's TurboTax Live feature, the key will be the speed with which and the care with which essential service needs are met in the credit union spirit of people helping people. As credit union leaders consider these trends, the one universal truth is that our world will never be the same after this COVID-19 pandemic. But every world crisis has driven changes, most positive and negative. Our responsibility as leaders is to understand the trends and to position for a new world. In doing so, there are lots of service opportunities for credit unions that lie ahead.